Hello everyone and welcome to today's major markets update for Friday, November 4th, 2022. And remember, we always use the medical/science evidence-based process. When the evidence changes, we change accordingly. That's why one has stops in place, be it for a long or a short, trying to trade the upside or the downside. When that changes, you have to change accordingly, get stopped out. If you don't, if you like sitting on 10% losses, you should definitely not complain at 30% losses, right? That's how it works. And we never ever get it always right. We try to get it right as often as possible. Don't forget Jesse Livermore's trading rules. It's quite many, but if you adhere to them, it will go pretty well. And remember, there are many ways for you to use my services. Please use that to your advantage. Also to fund managers, etc. Please don't hesitate to pick up the phone and call me. We can talk about many things that I don't cover in updates like this. I don't have the time for it, nor the width or the breadth, and it doesn't pertain to most traders that use this service. But fund managers have a whole different need. So I'm well aware of it because I manage funds myself as well. So please use that to your advantage. If you don't, that's on you, not on me. Anyway, let's go to the Dow Jones. So far, and yesterday, the Dow Jones bottomed right here at the lower end of this potential wave 4. We should possibly see a wave 5, and then we get a bigger pullback for wave 2, and then a wave C or 3. Nothing has changed that so far. We're holding that support with the notion that if we get a 1 and a 2 or A and a B, we don't know yet, that the bigger picture still has the potential for a new all-time high on the Dow Jones. Not, in my humble opinion, for the technology sector or the S&P 500. They might come close at some point, but not necessarily. And that is then this expanded irregular flat supercycle 4 wave. And also here you can see this B wave for the S&P 500 can go quite high, all the way back to almost 4,600. And that will then lead to about 40,000 for the Dow Jones. The technology sector will probably be stuck somewhere lower, which doesn't surprise me given the technology sector is almost retesting the October lows. So the technology sector remains pretty weak. So if the Dow Jones is strong, the technology sector is really weak. The S&P 500, being the hybrid index, will be stuck in the middle. So then it is not uncommon and unlogical to think that we're going to retrace pretty decent, but not all the way, and the Dow Jones can make a new all-time high. It would be the ultimate mind, you know what, if that's going to happen. It wouldn't surprise me given current market conditions. Otherwise, we simply have this path here that resembles that in June and July. We bottomed here for wave A, we're now in wave B, and then a wave C. Okay, I can't discern either yet. I prefer the impulse. I do. That's just always easier to assess because it just runs more cleanly. Now, I do want to point out seasonality, as you can see here. Seasonality, let me zoom in, does have us peak here in early November and then kind of move slowly, grindly lower into late November once again. Okay, so this is what I meant yesterday with we're going sideways lower for the S&P 500. This is not the technology sector. This is not the Dow Jones. This is for the S&P 500. But of course, we could expect something similar path for the other indexes. So I just wanted to make you aware of this seasonality. It had us bottom here in late October, which seems pretty reasonable. We bottomed, I think, October 13th. So overall, it's still following this path pretty well. So that could mean that we indeed are going to top and then decline before the end of year rally starts for the Dow Jones. How would that resolve itself for the NASDAQ100? This is the hourly chart. The hourly chart here shows a potential impulse path to the downside that targets somewhere around 9,900 plus or minus 100 ultimately, though we might stall a little bit higher at around 10,000. Okay, so here is wave 4 and this is wave 5. The green target zones are based on ideal Fibonacci extensions and retraces for this green internal wave 5. So far, we've only done 3 waves lower, okay? So the question mark 4 remains. We got very close to the October 13 low. And of course, this is so different from the Dow Jones, which is miles away from this October 13 low. By the way, did you know, my short-term ETF trading alert went already along the 3-time Dow, the UDOW, the UDOW, on the close of October 13th. And the last 1/4 position got stopped out yesterday. We sell into strength. The system is designed to sell into strength. Why? Because the higher things go, the more risk there is that things will go lower. So at some point you want to cash in your chips, and at some point you're trading with house money. So you raise stops, you have a trailing stop, you raise it accordingly. I wonder how many have been long since October 13th. I don't think all that many, and how many finally were kicked out for a double-digit gain for sure. I don't know off the top of my head. I think it's about 15%. Trading system doesn't give always winning trades. It doesn't. Today it got stopped out for 5% loss on the inverse of the semiconductors. It happens, but we cut losses short quickly. 5% loss versus a 50% gain. Do that over and over again. You know who's the winner and who's the loser. The system is the winner. Okay. Once the winner latches onto a trend, it will keep us in the trend while reducing its position size. I think it's the appropriate way of trading. Fund managers, etc., might trade and invest differently, but at some point, you do need to take your chips off the table. I don't care if you're in it for 10 years, for 100 years, or for 10 minutes or 100 seconds. Okay. It's always the same name of the game. I just wanted to point it out. It's very easy to trade properly with stops, etc. If you have an inverse ETF that gets stopped out, then the trade reverses, and eventually you'll move along and forget about the losing trade. They're just part. That's the price of admission you pay. Anyway, back to the NASDAQ100. So far, we've only done 3 waves up, 3 waves lower. Quite confusing, messy. Over the last 2 weeks, I would say, or actually 3 weeks. So I wanted to show you this chart as well, which I postulated a couple of days ago, maybe last week or the week before, where I was looking for a potential wave 4 low and then a potential wave 5 high for wave A, then B, and then C. Now, please remember, A waves don't have to be 5 waves. They can also be 3 waves. And this path is, as you can see, different than this path. Okay, so A, B, C, and this is turning into a more complex path. So we could have already wave A here, then the decline we've had here is wave B. So then this is not 4, but this is A. This is not 5, but this is B, right? The Tuesday's high was then wave B. So this is then, of course, this line there. We're going to move everything a little bit. It is still possible. So I want to keep this on the chart. And please remember, this market environment is, of course, the trickiest of all because of all the overlap that we're experiencing and this bifurcation between markets. Clearly, you can see the technology sector is revisiting the October lows. And so far, we're miles away on the Dow Jones. This is not easy because each is in their own environment. So if we, of course, go below today's low, then we have a nice impulse lower. We'll clean up and clear up a lot of things. I honestly kind of hope it would. That'd be nice. If not, then we also have a potential alternative path that we can look for. Again, this is a bear market, and a bear market, expect the unexpected. With, of course, some reservation, we do, of course, want to make sure that even the unexpected is on the charts. And this would be, I would say, the unexpected. But we have it, of course, on the table. And we are ready for it if it appears on the chart. Here is the semiconductors. The semiconductors yesterday bottomed right in the ideal wave B target zone, as you can see, and rallied strongly today so far. I prefer to see it lower to go back to the start here of this diagonal. We did get 5 waves up, 1, 2, and then an ABC for wave 3, a 4, and also an ABC for wave 5. That was Wednesday's high. We clearly, of course, made a higher high on Wednesday compared to the wave 3 high, which is right there. Okay, so I want you to be aware of that. So that's 5 waves up, leading diagonal, and then a quick collapse. So wave B/2 can already have completed. If at any point in time we go back above Wednesday's high, then we are already in wave C/3. But please remember that can still be just wave A of A. That this is wave A. Okay, there. And then here we so far only have wave A. Okay, this can be a quite complex there, wave A. Then we get another wave B, okay, and then we get another wave C. Now I'm only working here with the space available. Let's move this one a little bit here, better in time. So then we get the wave A, we get the wave B, and then we get the wave C. See the difference in path? Instead of just going one more up and then down, we go up, down, up. That is the be prepared for the unexpected idea. Unfortunately, it didn't get saved, but oh well, we'll give it another try in a moment. That brings me to the S&P 500. So far, it's following this ideal path for a B and a C wave. We haven't even reached the ideal wave B target zone. If this is a B wave, it should last a little bit longer, in my humble opinion. We did bottomed here right in the ideal A, so B and then C, as an analog to the June-July price action. And from there, we'll then bust higher for wave C to match the end of year seasonality. So this will help us, of course, with the seasonality we also saw in November, right? The average seasonality in November had a peak somewhere early November and then kind of slowly lower for the rest of the month till the end of November, and then we start to rally. So that would fit quite nicely. Then we have the IWM. I like the IWM as well because it's holding the 50-day, still below the 200-day, but it has the potential for a wave 4-5 setup. It did come awfully close to overlapping with this wave 1, which was the October 14 high, but no overlap. That means close but no cigar. We break above Wednesday's high, and then we have a wave 5, and we should see a pullback, and then the rally. Okay, so this still matches also the average seasonality with a little bit more upside left for the next couple of days to complete this wave 5, then a pullback, and then wave C. Alternatively, the ABC, similar to the Dow Jones, those are the two options we're tracking for the Dow Jones as well. We get the B wave currently underway, which will last a couple of days, should be overlapping messy, then a C wave into end of November, and then the rally. Okay, so nothing really has changed compared to yesterday. I think we are nicely on track. We have a good grasp on the markets. Again, the NASDAQ100 is the weakest of them all. And if everything is going according to plan, ideally a little bit higher for this green wave 4, and then a last wave 5, that'd be perfect, okay? And the last wave 5, this should all last a couple of days. Same here for the Dow Jones, either an ABC lower, or we get the 4 and then the 5. As you can see, upside reward versus downside risk is a little bit more skewed towards the downside. But again, I don't have enough price data yet to confirm either of the two, so we'll give it 50-50. If we get 5 waves up on the bigger time frame, then we should look here for a new impulse to about 40,000 for the Dow Jones, okay? Not necessary for the S&P 500. I think that one will do a larger ABC for a cycle A wave because technology sector is so weak, and the S&P 500 is a hybrid between the Dow Jones and the technology sector. Confusing price action in the technology sector, the NASDAQ100. Why? As rising interest rates is not good for big tech, and we therefore have revisited pretty much the October lows. everything is so far 3 waves up, 3 waves down. Again, I prefer to see 5 waves lower. That would really be nice to complete this red wave 5 of C of A, and then we'll get the bigger bounce. Alternatively, we've already completed blue wave A, and all we're going to see are like 3s. So to be determined, the NASDAQ really needs to top above the late October high to suggest the C wave is underway, or to tell us the C wave is underway. And for now, I just have no good way of discerning which of the two is going to happen. Below today's low, that will help us with knowing, okay, then this wave 5 is complete. Then we should see a much bigger bounce. Okay, so again, I still look for higher prices intermediate term, lower prices very long term, as this is, in my own opinion, a long-term bear market. All right, I think I've repeated myself several times. If you have any questions, just email me. Thank you so much for being a valued premium member. Take care, trade safe, and I'll see you all on Monday. Bye.